Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently with that price action and what I think is likely to happen next. Now as I get into today's video, if you do find it useful and informative, smash that like button, I really do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications and you will not miss another video update. Above and beyond these things though, if you haven't yet joined us in Discord, why not check it out? The link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into today's video. We'll kick things off with that 1 hour time frame. So here we have Bitcoin paired up with USDT and we're using Binance as our data source here. Now as you can kind of see, we were expecting a bit of a move upwards. We were targeting out the 35,678 to 35,984 yesterday. We actually hit this, got rejected and then rallied up for some reason. So for the most part we did break above this and it does change our structure slightly. So what we're going to do is we're going to just readjust everything that's going on here, and yeah, we're going to be mainly concerned with the idea here of maybe a 335 coming towards the end here and just pushing up a little bit further. So we're going to have a take a look at that because we did breach higher than the previous highs. Basically this area of supply which we chewed through and rallied on higher than. So let's go ahead and just do our due diligence here, because what we need to do is we need to check what is going on. We do have a little mini 5-wave pattern right here, right? 1, 2, 3, 4, and 5, right? We can see right inside there, back up into this range, just a little mini 5-wave pattern. That was, yeah, a couple days ago. Then we moved on down. Now from here, if we take this entire measurement of that 5-wave pattern to our low, which bounced on the 50 SMA, which was yesterday about 1500 hours, and that's UTC now, which is good. Here you can see we pierced above the 1.236, not the 1.618. Okay, so that's an important distinction. It allows us to be more within the territory of what is called a zigzag pattern rather than that of a impulsive pattern. Now, because we pierced above the 1.236, this essentially means that we are no longer looking at this pattern as just a zigzag isolated on its own. Instead, we're going to be moving more into the territory of triple zigzag patterns, which essentially means it's going to be W, X, Y, X, and Z. Okay, so a 5-wave pattern that is corrective rather than impulsive. And so a corrective pattern can go in both directions. By the way, guys, it can go up or it can go down. It really doesn't matter about the direction. It's just the definition of whether or not there is a trend there or not, right? And so in this particular case, we have a W wave coming up, an X wave coming down here, a Y wave coming up, which may or may not yet be completed. It looks like it potentially is, but we'll see how that kind of plays out. And then you'll have an X wave come down and another Z wave going up. Okay, so that's an interesting thing to kind of note. Now, as we kind of zoom out of this a little bit further, we have to kind of consider, okay, well, what else is potentially going on here? Did we make some kind of mistake somewhere along the lines? And actually, you know, what we've got to do here is actually consider that maybe things are not quite in the same kind of structural patterns that we thought they were. And specifically around here where we have this potential, what I thought was an ending diagonal pattern, maybe isn't an ending diagonal pattern, and we actually have something else occurring in here. So out of interest, what I'm going to do is I'm just going to take a measurement from this wave 5 high that I currently have drawn up to the low that is over here, and I'm going to move this over to the low that is over this side. And the interesting thing here is you can see this Z wave would put us right into a target range, which would be between 1 and 1.236. So I'm just going to draw in a little yellow box out of interest. This is a wild card. This is something that doesn't necessarily mean it's going to play out, but it's of interest to me right here. 37,000 to 37,700 approximately, right? And that there could actually then tie into a corrective pattern, which would be a WXY all the way through here. And inside here at the very end, we'd just have a WXY like this, if that makes sense. So we kind of have ourselves a potential corrective pattern here, which would mean that we're not actually tracking a 5-wave move up into this peak, and instead we probably have to have some other recalibration within this little previous move that I was monitoring. So for the most part, it's quite interesting to me. So it's going to be interesting to see whether or not we can rally on up higher into that $37,000 range. It's going to be pretty cool. Now, I would want to know if we bring up our stochastic RSIs, as you can kind of see on the right hand side here, we're overbought on the monthly time frame. We're overbought on the weekly time frame. We are going to check the daily. I think we've just come down from overbought, 8 hours overbought, 4 hours overbought, and the hourly is coming down a little bit. So although I think we've got some progression to the upside to be had here, we have to be very mindful that the bigger macro picture is looking for corrections. It's looking for momentum to start shifting in the opposite direction. Okay, so it's very natural to kind of have profits taken off the table. And I think we're getting to that point where profits are going to be taken off the table. Okay, so interesting. Now, if I remove the stochastics and throw the volumes in, you can see that volumes started to push up a little bit and have cooled off. Now, so what's interesting about this is, if I zoom in here, you can see that volume peaked here at 2 a.m. this morning, but price continued to rally on up higher. So basically higher highs on price, but lower highs on volume. So we're starting to see the reversal inside there as well. Okay, it's interesting to kind of take a look at these things. Now, from a divergence point of view, I don't think there's anything loading up in here. Absolutely nothing at all. So that's not a problem on the hourly chart. And I'm still working on that one. Cheeky indicator that I'm not going to show you guys just yet. Perfect. Okay, cool. So let's go ahead and take this into our daily. So what is our daily showing us? Well, we obviously have our fair value gap down here. This one is basically between 30,248 and 32,832. So again, fair value gaps are created from an imbalance in the order books. Essentially, large buy orders came in and not enough selling was occurring. So the gap here was created. Price had to move to find the sellers. And so you end up with the gaps that get left behind. Now, gaps like this, they don't always get filled, but there's a high probability that they do. So we draw them on here and then we kind of look at price moving back down into these ranges. Now, from a smart money concepts point of view, smart money concepts is telling us that we're bullish. We had our change of character here. We had a break of structure and another break of structure. That basically means, and I don't like the term break of structure because it sounds negative, but actually in this particular case, it's positive. So we have a change of characterization. Goes from bearish, it goes to bullish, right? A break of structure is basically a confirmation of that change of characterization. And when you have multiples, it's looking pretty good, right? So on the daily time frame, we do have that bullish idea right there. But at the same time, I'm also quite curious to see whether or not we are going to be looking at a progressive move down. Now, historically speaking, on this channel, I've often said higher highs and higher lows is not necessarily guaranteed a bullish market or anything like that. A lot of people think higher highs and higher lows is a really good thing. And I look at this particular pattern right here with higher highs and higher lows, and I look to this and say it's not as good as people say, because higher highs and higher lows in essence is actually a really positive thing. However, when you have an overlapping candlestick pattern, and you see this here, right? We had a peak here. Okay, we rallied on up, we hit a new higher high, but then we fell back down lower than the previous peak. This overlap, okay, is not a good sign when you have higher highs and higher lows. Essentially, it means that this is a short-term continuation pattern. Okay, now sometimes these become ascending wedges and all that kind of stuff. Essentially, what they do is they break on down. Okay, so we want to be really aware that although this is great right now, short-term, we're seeing higher highs. Long term here, or medium term here, is that there's probably a progressive move back down towards 30k where we get that fair value gap filled out. So I want to be very aware of that. Now, our stochastic RSI is lifting back up again as we hit this new recent daily high, and it's not as slow as you'd want it to be. And so basically, for those who do not know, stochastic RSIs, they basically monitor the strength of price movements. Okay, if it's oversold, then chances are it's going to be starting to see momentum shifting upwards. And if it moves rapidly, it means there's actually not a strong movement there. And the slower the stochastic RSI moves, the stronger the movement is. Okay, so here we can see a pretty rapid movement over the last couple of days out of oversold. We're back in the middle now, which is about 44. Yeah, we're 44.76 right now out of 100. So we're hitting that 58% area, right? And so we want to be very aware that momentum shouldn't shift back down if it goes back to that overbought range. So not as strong as you want it to be. So again, the overlapping candlesticks, the stochastic RSI moving the way that it is, it's not looking overly strong. Throw in some volume profiles and you can see right here that basically we have hit higher highs, right, in price, but we have a lower volume. Okay, so we have the higher highs in price, but the lower highs in volume. Okay, so volume isn't where it needs to be. This is not showing you an accumulation phase. This is showing you a distribution phase. I spoke about that yesterday. So for now, when we take a look at these things, it's not giving me that strength and that kind of that bullishness that we need to see. We also saw bearish divergence here. Again, you can see it here with higher highs in price, but lower highs on the RSI. And so I'm very aware that this particular pattern plays out time and time again, and unfortunately a lot of retail get kind of trapped out. Ultimately, we are looking for moves to the downside here. It shouldn't be surprising at this point. Now, from a weekly standpoint, you have a very similar situation. What do we see? Well, we can see here that volume, you can see here that price is going up into higher highs. We're up in the overbought area on the weekly time frame. The last time that we were overbought on the weekly time frame was right here. That was April 2023. We did see a move to the downside to June of 2023. And that got us into the oversold area. We then rapidly moved back up into the overbought area with a new high, and we are right up here as well. Okay, so again, we're in that territory on the weekly where we're looking for progressive moves downwards. Even on the monthly time frame, we are overbought. The last time that the monthly chart was overbought like this, guys, was up here in April of 2021. So again, you can start to think about what might happen here as you see these overbought areas on price. Okay, you can see one right here. Okay, I'm going to draw in the circles right on the price chart as well. What do you think is going to happen now we're overbought on the monthly time frame? I'll just pause for a second and let you kind of soak that in because it's not what you are being told. Okay, so that's your monthly. Now, come back down into the weekly here for a sec. And what we're going to do is we're going to throw in the volume profiles. Here's the volume profiles on that weekly time frame. Looks good, right? Not so good. So as you can kind of see, bullish market volumes are really nice and high, right? Bearish market volumes are really, really low. Okay, so we can see here that basically there just wasn't really a lot of volume in the bear market coming down. You can see that also in here in the volume profiles. As price was going down, volumes were going and just non-existent, right? And although the price has moved up quite rapidly, right, hitting these highs, where's the volume? There's no volume behind it. So this is really a distribution rather than an accumulation. Okay, now this is the Bitstamp data, and it's the same concept and the same data appears when we take a look at it on the Binance USDT pairing. Here's the USDT pairing on the weekly time frame, right? There was a little bit more volume on USDT at the beginning of 2023. As you see up into February, but then bam, it disappears, right? And so what's going on here is essentially just distribution, right? Ever since March, and we saw this move to the upside, we're hitting these higher highs in terms of price, yet the volume just isn't there, right? And so really want to kind of spell this out as clear as I can. This doesn't look like a bullish market right now. It might feel like one. It might mimic the price action of one, but fundamentally there isn't really a lot of volume pushing the price of BTC. And so we have to be really, really cautious because essentially I'm not that confident in thinking that we're not here for a big move to the downside. With the weekly and monthly being overbought, volumes being non-existent pretty much, chances are we are looking for moves to, at least in my opinion, $20,000. But that's kind of where I sit with this one. Let me know your thoughts and opinions down in the comments below. But I think I'm going to wrap this video up right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.